Hi, everybody. Thanks for joining me. Before we get started, I'd like to ask you to hit subscribe to my channel to keep up with all of my latest investing and personal finance content. And please check out the link you see on your screen for a message from our sponsor, The Motley Fool, where you can get the 10 best stocks to buy right now. All right, so if anyone is looking for more fintech exposure in your portfolio, we've got you covered. We are going to talk about two of the biggest fintech companies, the most popular among investors. One is Visa, ticker symbol is V. That company really needs no introduction. Most people listening have a Visa card in their wallet somewhere. And Square or Block, whatever you want to call it now. To me, they're Square until they changed their ticker symbol, but the official name of the company is Block now. So I'll go ahead and kind of give a rundown of Block and what it does. There are a couple of sides to this company. Block, or Square as it was known when it started, the initial purpose was to democratize access to electronic payments for businesses of all sizes. It used to be prohibitively expensive for, say, a plumber or somebody selling crafts at a market to accept credit card payments, and a lot of businesses were losing sales over this. The whole company was started because co-founder Jim McKelvey is an artist, and a customer tried to pay for a piece of art with an Amex card, and he wasn't set up to do it. And he ended up losing a big sale, and the original Square reader, the little square thing that stuck into iPhones, he designed that out of a piece of plastic and actually won his first Metropolitan Museum of Art award for that. Really fun story. I had him on Industry Focus a while back. So that's how Square started. They've evolved into a massive ecosystem for both businesses and consumers. On the business side, which is still called Square, the company processes payments. Their payment volume is over $200 billion annualized right now. Very, very big business. They make the hardware that, the little iPad-looking point-of-sale terminals. A lot of those are Square terminals, in addition to the small Square readers that merchants still use these days. They also have a lending operation on that side. They have buy now, pay later financing, which they picked up through their Afterpay acquisition, which that's a whole other can of worms I don't want to open right this minute. And on the personal side, they have their Cash App. A lot of people listening to this probably have the Cash App on their smartphone somewhere. The Cash App has almost 50 million active users. It has essentially is designed as a bank replacement. There's a linked debit card to it. You can get direct deposits into your Cash App account. You can buy stocks through your Cash App account. You can buy Bitcoin through your Cash App account. It's designed to replace a lot of what banks do, and eventually they want it to replace almost everything that banks do. Square actually has a banking charter that they use to make its loans now. There are a few other sides to the business, but generally those are the two big ones, the Cash App ecosystem and the Square ecosystem for businesses. They have a lot of other cryptocurrency ventures, which is why they changed their name to Block, to reflect their blockchain technology development. Square's recent numbers look really good. This business has been on fire. It's not as on fire as it was in the middle of the pandemic, when the stock was trading for roughly 5 times what it is now, or 4 times what it is now. It went up a little bit. But its gross profit was up 38% year over year in the third quarter, excluding Bitcoin, which people aren't as interested in Bitcoin as they were a year ago, we're being totally honest. Revenue was up 36% year over year. It roughly broke even on a net income basis. A lot of costs related to that Afterpay acquisition weighed on its profitability. But the business still has a lot of traction, a lot of room to grow, and they're doing really well. Now, they are a less consistent business. They're not consistently profitable yet. They could be if they stopped investing in things like Afterpay. But they could be profitable if they wanted to, curb growth. But with 38% year-over-year growth, why would they do that? So they're definitely the growthier of the two stocks here, and that is Square or Block. Tyler, give us the overview. What does Visa do for those who don't know?
Well, I mean, you got a Visa card, so it basically enables kind of the credit debit transaction where it doesn't actually, take any of the financial obligation of that credit card payment, but just takes a rip on the actual transaction. So just kind of making it was kind of the digital wallet before it was digital, I guess would be the best way to put it. One of the the things that I always find interesting about Visa and MasterCard in particular. It's almost like the myth of no growth, because you think of Visa and MasterCard as ubiquitous within the United States in terms of transaction volumes. It's the use of credit and debit is pretty saturated in the U.S. Between those two, you can say American Express and Discover as well. But I think that really is a myth for companies as large as Visa and MasterCard, for the simple fact that, and Visa in particular because of its much larger global presence, is the fact that there are so many other places where penetration rates of credit and debit cards is still so low, and there's so much more room to grow in that rate. I mean, just in 2022 alone, their transaction volume rate increased 11%, with a large bulk of that coming from international transactions. And one thing that they have been really making their hay on as of late has been cross-border transactions. I do know that the CEO mentioned in their fourth quarter earnings report that their cross-border transaction volume was the highest it's been since 2019, so pre-pandemic times. With that in mind, considering how much more market penetration can happen for card payments, debit payments, as well as digital payments. I mean, these aren't these static businesses that only can do credit cards. They have been getting into digital payments, getting into B2B, B2C payment processing in ways that, somebody like Square is doing, Block, just on larger scales, not small, medium businesses where, at larger institutions. So with that in mind, I think that saying that this is a, kind of the storied company that doesn't have a lot of growth, I think that's kind of a myth. And people looking at it can see a company that's still growing at the, double-digit rate, which is great, and is throwing off a lot of cash. So you compound double-digit revenue growth with, in 2022 alone, $10 billion in share repurchases, and all of a sudden you start leveraging into some pretty spectacular earnings growth, which, if you're looking for really long-term buy and hold, that's hard to beat.
Yeah, I would definitely agree with that. See, with Visa, the question is about growth, right? That's everybody's question, as you just mentioned. And another thing that people kind of overlook about Visa is it's really a natural inflation hedge, right? Like, they make a small percentage of every transaction no matter what. If the average transaction goes up by 10% for inflation, their payment volume and hence their fee income should go up by a similar amount. So they're really a natural inflation hedge, and I have to believe that that's one of the reasons it's outperformed the market this year. Visa's only down 10% from the highs right now. Square's down by about 80% from the highs. So there's a reason for that. It's because it's a more consistent business. It's built to essentially be a cash machine, like a lot of the machines that take its cards. Visa it's built to generate money no matter what the economy's doing, and it's an inflation beneficiary in a way over the long run. So I don't know. I mean, on a valuation basis, I don't know which one I would call the better buy. I tend to be a growthier, more optimistic, investor, but there's really a good argument to own both of these. What do you think?
I don't know enough about all of the businesses in Block to make a really call on them specifically. Obviously down much further, so your expected return should be higher in the future. But I am of the opinion, and this is the kind of investor I am, is that revenue growth isn't always the best thing in the world, and there are plenty of opportunities out there in companies that, 5 to 6% revenue growth over really long periods and very profitable rates can be wealth-generating machines for people over the long term, Visa being one of them. And I'm not afraid to go for a low revenue growth company that can leverage that into higher returns growth in terms of free cash flow and earnings growth.
All right. Like I said, I think you could own both of them. I think Square will eventually get to that point if it keeps doing what it's doing, but it's not there yet, and it's years off from there. So I can't argue against Visa, but Square is the one that is in my portfolio, and eventually I will start calling it Block. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.